La 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 la. Oh, it's working. The shares are out. The stream has begun. Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life, and today is Monday, and we have a pump in various random coins, including Flux. Oh yes, it is a glorious Monday. We are going to be talking about, philosophically, it doesn't matter whether cryptos or securities. Practically, it does. That's going to be an opinion piece from CoinDesk and the main topic of today. I'm trying to get as many show notes done the night before so that we are a little bit more streamlined and everybody is ready to go. But as you guys may know, the news never stops with crypto, so we're going to be adding in tons of stuff in the morning as well. We have Ergo Pad launched on GetBlock, so you can now mine the Ergo Pad token on GetBlock. You can check out my WTF is Ergo Pad if you want more information on what Ergo Pad is. Then we are going to be talking about quite a few different announcements. We had ZIL go down, and we're going to be reviewing exactly why, etc. We're also going to be taking a look at some listings for new pool listings from Neoxa. We have some new exchange listings from Flux. We have a release update from Ether 1. We have the new 13700K, basically overclock information, up to 6 gigahertz apparently now. And then we have more information on the launch date for the Intel Arc desktop GPU, as well as a new miner release. So tons of fun stuff coming down the pipeline for today. I hope you guys are having a great Monday. Let's get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. And welcome back, everybody. I'm wearing a nice shirt that Coastal Crypto Mining sent over. You can use promo code SOAT at coastalcryptomining.com for 5% off your ASIC order, so definitely go check that out. Just a quick little plug along with the sponsor, of course, today. Coastal Crypto Mining is not a sponsor. I only get paid if you order. So that's the full disclaimer there. SRB Miner released 19 hours ago. They added the algorithm Mike for VCAX coin for CPU mining with a 0.85% fee. They significantly improved performance on curve hash algorithm for GPUs. Reduced dev fee for Caspa and Heavy Hash down to 0.85%. Using any of the supported dual mining combinations automatically enables auto-tune. They added possibility to disable an algorithm in dual mining mode per GPU. And the default for GPU dual max loss is lowered from 5% to 3%. It is now possible to disable one of the algorithms in dual mining mode per GPU. You can do that with this particular switch, the GPU ID, ETH hash GPUs, and Caspa GPUs. Separator between GPUs is exclamation point as usual. For example, if you have a 4 GPU rig and want to dual mine ETH plus CAS on GPU 0, 1, and 3, and ETH only on GPU 2 without CAS, you would enter it as such. Links down in the description if you need to pull all of that. The GPU dual max loss parameter should be used to set ratio between the hash rates of two algorithms in dual mining mode. and lower values give higher priority to the first algorithm, ETH, ETC, and Autolicos 2. As always, GPU core clock affects the effectiveness of this parameter. Sometimes a slightly higher core clock can make a big difference, and that is the note that they bring up for you guys. So, new release from SRB Miner, a new CPU coin to check out with VCAX. I haven't heard of that, so definitely something to take a look into as they've added support for it. But in new hardware news, we have the information for the launch dates on the Intel Arc desktop graphics cards. And they're saying here on WCCF Tech that there should be a launch between August and September. Intel Arc's graphics cards have been the main discussion of this weekend in the rumor mill, and now we have more info coming in from Igor's lab. According to Igor Walasek, who managed to obtain an updated ARC schedule, the lineup would see a gradual launch starting from the 5th of August till the 29th of September. This would be the third launch schedule that we have heard this weekend regarding Intel Arc's line of desktop graphics cards. The first came from Moore's Law is Dead, in a rumor which was turned down by Intel CEO Pat Gelsinger and VP of Graphics Raja Kaduri, with both confirming that Arc is still very much on track for a Q3 2022 launch, and now we have Igor's lab confirming this as well. The launch is said to take place gradually, and we may even see each card become available in retail one by one rather than all being launched at once. If you look at Intel's marketing strategy, they are doing this already. The Intel Arc A380 launched first, and then Intel started talking about their high-end A750 limited edition graphics card, followed up by the Arc A770 limited edition. It is a pretty slick-looking design. The company is also said to give select media the opportunity to review these cards ahead of launch, but whether these media only include tech YouTubers or written media outlets remains to be seen. The exclusive reviews will only be based on Intel's own ARC reference designs, while AIB models will have no such restrictions. But the rest would also have to wait longer, considering that we already have seen one AIB limited to China release its card weeks after launch to DIY, and all reviewers who tested it had to purchase the product rather than Intel sending them one out by themselves for reviews. So there's all of that. In addition to this, the primary reason why Intel is not doing a massive global launch, but rather relying on gradual rollout between August and September, still has to do with Blue Team's readiness in terms of drivers and support. Chipzilla wants to assure that ARC is ready for users, and only then will it ship the products globally. Now, we've covered, of course, the specifications on the Intel chips quite extensively in the past, and not much has changed. At the top end, we are still getting a 256-bit bus with GDDR6 clocked at 16 gigabits per second, so a little slow. Unfortunately, we're not getting the new GDDR6. And depending on the price, though, this could still be, enticing, right? If you see here, we could get a 256-bit bus at 16 gigabits per second with 225 watt TDP at $349 to $399. And that's probably the most enticing one outside of the one right below it for mining, which would be the 225 watt at $299 to $349. So maybe a $300 GPU with a 256-bit bus could be pretty awesome for mining, of course, memory specific or memory heavy algorithms such as ET hash and Autolicos and the likes. So that's kind of what I'm looking forward to. Hopefully we see them get launched here in the next couple months and we get our hands on one for testing, and we'll update you guys when we do. Now, there is more information, of course, on the CPU side coming from Intel with their 13700K Raptor Lake CPU, and it's been overclocked to a whopping 6 gigahertz across all the cores. An alleged video showcasing the Intel i7 13700K Raptor Lake CPU has popped up, which shows an impressive 6 gigahertz overclock across all Raptor Cove cores. We just got the gaming benchmarks of the same chip a few hours ago, and now we can look at what sort of capabilities will be on offer when it comes to overclocking. The upcoming 13th gen Raptor Lake lineup is going to be an optimization of the 12th gen Alder Lake CPUs, featuring Raptor Cove cores with enhanced cache structuring, faster clocks, and also an increase in the number of Grace Mount E cores. The CPUs have also been highlighted to offer some great overclocking capabilities, and it looks like we have the first overclocking figures coming to us from video cards and Twitter users. You can see here 5900 megahertz. The Intel i7 13700K CPU will be the fastest 13th gen Core i7 chip on offer within the Raptor Lake CPU lineup. The chip features a total of 16 cores and 24 threads. This configuration is made possible with 8 P cores, which stands for performance cores, based on the Raptor Cove architecture, and 8 E cores, which stands for efficiency cores, based on the Grace Mount core architecture. The CPU comes with 30 megabytes of L3 cache and 24 megabytes of L2 cache for a total combined of 54 megabytes of cache. This will give them obviously some improvement in some algorithms, by the way, for mining as well. Still not going to be on par with AMD and Ryzen for that particular setup, but improvements nonetheless on the Intel side for the cache. The chip was running at a base clock of 3.4 gigahertz and a boost clock of 5.4 gigahertz. The all-core boost is rated at 5.3 gigahertz for the performance cores, while the E-cores feature a base clock of 3.4 gigahertz and a boost clock of 4.3 gigahertz. So there are a total of 3 benchmarks of the alleged 13700K CPU with overclocked frequencies. First and foremost, we have the chip running at 6 gigahertz on an MSI Meg Z690i Unify motherboard. This overclocking demonstration had just the 8 Raptor Cove P cores enabled and clocked at 6 gigahertz with a voltage supply of 1.42. That's pretty high on the voltage, still really impressive regardless. The CPU temperature should be disregarded since the PC is in idle state, so we can't say what the maximum temps or power input was when running the CPU benchmark, but we do know that the chip scored 983 points in single core and 7,814 points in multi-core, and you can see this screenshot of the CPU Z right there. The second benchmark is with the whole 8 P core and 8 E cores enabled. We can see that the P cores are clocked at 5.8 gigahertz and the E cores are clocked at 3.7 gigahertz. The voltage was maintained much higher at 1.5 volts, but it should be pointed out that the user wasn't running this under LN2 and a high-end liquid cooler was being used. With this overclock, the 13700K Raptor Lake 16-core chip scored 947 points in single core and 12,896 points in the multi-core test. That at obviously at 6 gigahertz puts it in the lead over every current CPU out and of course their entire lineup. And on the multi-threaded, it comes very, very close to the 13900K at 5.8 gigahertz for the all-core. Pretty impressive stuff. What is really interesting here is that even with a lower 3.7 gigahertz clock speed, the E-cores are responsible for 40% of the performance. This is why we have seen such a big performance uplift in multi-threaded workloads for the leaked Raptor Lake CPUs. Lastly, we have a chip running at 5.9 gigahertz across all P cores, and here we can see actually that the power and temperature that the chip produced. With a voltage supply of 1.44, volts, the CPU was maxing out at 86 degrees Celsius with a power consumption of 238 watts. Now, as I was expecting the temperatures and power figures to be much higher, but we should remember that these are just the 8 P cores that are active. Enabling the E-core should result in even higher power draw and temps on the chip. So the Intel 13th gen Raptor Lake desktop CPUs, including the flagship 13900K, is expected to launch in October on the Z790 platform. The CPUs will be going up against the Ryzen 7000 CPU lineup, which also launches in the fall of 2022. It's pretty exciting stuff. Cracking 6 gigahertz is amazing, especially if it really is only on, a custom liquid cooled or even possibly like an AIO of sorts and not LN2. just a daily 6 gigahertz if you only have, of course, the performance cores enabled is what it sounds like in general. Otherwise, it sounds like it might get too hot post, you know, if you go over 6 gigahertz with the efficiency cores enabled. Either way, pretty cool to see it being cracked on the desktop lineup there. Let's talk about the Ether 1 and their project update. 2 days ago, they launched an update with basically what's called version 2.1 in their Phoenix update. They performed some major fixes and they removed old boot nodes and updated with new ones. And they have the full changelog here that we can check out if you guys want to go through it. Of course, it's going to be on their GitHub. I just wanted to bring that up that Etho is doing some more development. So you can find links for that down in the description below. We also have a new listing for Flux on Cadix. And this is a big deal too, because obviously we had the big pump from essentially Flux today, about 33%. And this is through, of course, the Cadena platform. So you have obviously, hence the name Cadix, and you now have Flux here that you can swap. So that's pretty cool as far as support, more support for Flux. And I believe their pump was 33%. Let's go ahead and pull that up real quick. %17% right now is what it's showing. And there was that pump. I'm not positive that that is just from this particular listing. I couldn't find any other necessary reasons for the pump other than this, though, to be fair. So this is what we're seeing as far as Flux today. We also have a new listing of Neoxa on a mining pool, and that is surprising, to say the least, with the hack that's going on right now. I guess the hack is over, but you still have the confirmation times being very, very long to exchanges, over 725. That being said, they are listed now on miner pool. So if you want to mine Flux to mine, or mine Neoxa, excuse me, to miner pool, which is previously known, of course, primarily for Flux, you can head on over to neox.minerpool.org, which is linked down below. And you can see here, you even have a solo option for Neoxa. So if you're looking for an easy solo option, Minerpool has you covered. And that is pretty good news, I think, overall for the network, because Minerpool is a pretty large pool in comparison for these altcoins that we talk about. Other coins that they have, of course, is Firo, Ravencoin, and Flux. So now, let's get into the first big one for today. Zilliqa went down on the 30th of July, or actually the 29th of July. And it's a little interesting. So I haven't done WTF is on Zilliqa. In fact, like, for the most part, I don't know exactly how it functions. On a very high level, I can tell you that if I had to take a guess as to why it went down compared to other proof of work networks, it's due to their functionality of not necessarily mining all the time. So you essentially are mining Ethereum if you're mining Zilliqa, and then you pop over to Zilliqa to solve a block, and then you pop back over. And we're going to get into this article, but it is very technical. So try to stay with me. The TLDR, though, is that Zilliqa did go down the entire network on the 29th of July. So the Zilliqa network experienced an unplanned outage due to a specific function call, Scylla built-in function, that impacted the mainnet operation on the 29th of July at 2259 UTC. We identified by analyzing the node logs that the root cause was the built-in Scylla function call ECD SA_recover_PK with an out-of-range parameter. The out-of-range parameter, rec_ID, was not handled correctly by the integrated OCAML SECP256K1 library, and that caused a segmentation fault. The segmentation fault caused the Scylla server process to terminate on the mining nodes. The Zilliqa process depends on Scylla server process. So the Zilliqa binary stopped processing blocks and the mainnet stopped progressing. And this is kind of where the root cause, I think, exposes maybe a potential issue with Zilliqa. And that is that you have this Scylla server that is required. We'll kind of go through that and try to explain it. But the built-in Scylla function caused a crash. The Scylla function depends on an external library, and that's a cryptographic library. The deployed version of this library resulted in a segmentation fault when one of the parameters was out of range. In this case, the caller used 28 as the rec ID parameter, which led to the outage. The library in question, wrapper libraries, did not check until version 0.4.4.4. There we go. The resid argument is within the bounds, calling the unsafe code, which segmentation faults if given incorrect inputs. The proposed fix is to rebuild the Scylla instance again to ensure that it would pick up the latest version 0.4.4 of that library that we're talking about, which was reprogrammed to ensure that it handled the out of range parameter correctly and mitigate this issue of reoccurring. We rebuilt the Scylla binaries running on the Zilliqa miners with the latest version of the wrapper library and the dependent Zilliqa binaries to ensure that it would pick up the new Scylla version, which is version 0.11.1. This has been tested in their private dev testnet, and they could reproduce the issue before the fix. They say, we shall proceed to deploy the binaries on the mainnet and look to converge the network as quickly as possible. Say, thanks for your patience. We sincerely apologize for the inconvenience and thanks for the continued support. So this does bring in, obviously, some questions surrounding the design of the Zilliqa network and maybe some potential vulnerabilities there. Obviously, with it going down, that's going to be an issue. You don't see this necessarily in traditional proof of work blockchains, I think, because you don't have what this specific kind of separate server that's set up, right? This Scylla server, essentially. And I'm kind of curious as far as from an architectural design standpoint from this blockchain as to if that's always required for the miners to process through, and why is there this kind of point of failure here in the first place, because it doesn't sound like your security is fully provided by just like mining and hash rate on the network. Maybe you guys can help me out in chat and explain this. Maybe I'm missing something. I definitely could be. Like I said, I haven't done a deep dive on Zilliqa in the past, so I'm a little bit of a dummy when it comes to exactly what's causing this. But to me, it does seem like a design issue, specifically in relation to the way that blocks are solved on the network. Obviously, they've been a really huge influence on the mining community thanks to your ability to dual mine them through pools like easel.me, or even manually set it up, because you don't have to have only your miners pointed at Zilliqa. You can be mining some ETH or Ergo or ETC, and then you can hop over and solve a block, get a little bit of extra Zilliqa, and kind of boost your profitability in that manner. So that's appreciated, but I'm wondering if that particular design is also, vulnerable to a certain extent. It's not good when you see a proof of work network go down. So we also have a new announcement. We talked about it in our WTF is ErgoPad video. I was super excited to have Mr. Marty on and talk about ErgoPad with us, and they are now going to be integrating with miners as well. They officially announced it and launched it yesterday, but on getblock.io, you can mine ErgoPad, which is a token on the Ergo blockchain. This is very similar to what Aneta did, except they're doing a much, much smaller release of this. And there's a couple reasons why, but We'll get into that when we read their announcement. ErgoPad is launching a getblock.io subpool. Miners will be able to directly mine ErgoPad while also mining ERG. You can find out how it all goes down below. So what is a subpool? We've covered this before, but a refresher is always good. Subpools are a subset of smart pools on the getblock.io platform. The platform uses smart contracts to create mining pools, making it possible to decentralize mining away from centralized pool operators. Subpools are an extension of this protocol, allowing miners to choose to receive some Ergo-based tokens instead of just Ergo while mining. With the help of getblock.io, the Ergo Smart Pool or ErgoPad Smart Pool will be available to miners today, July 31st, 2022. It allows miners to receive some ErgoPad tokens when they'd otherwise earn ERG. In the ErgoPad subpool, miners still earn 90% ERG and 10% will be distributed as ErgoPad tokens with a 10% value bonus on top. To say it in another way, if a miner received 10 ERG in a block, 1 ERG would be exchanged to 1.1 ERG worth of ErgoPad as mining rewards, and the remaining 9 Ergo would go directly to the miner. So this is a little different than a Neta. Why is that? Well, it is going to actually pay you Ergo still. So as opposed to a Neta where it takes 100% of the Ergo and gives that to a Neta, and then a Neta gives you 110% of that worth in a Neta to your wallet, ErgoPad's going a little bit of a different direction. They're only taking 10% of it, and then they're paying you essentially 20% back, right, in ErgoPad, while the rest of the 90% is being paid to you in Ergo. So this is a little nice. It's a little different because now, as opposed to just getting a Neta and then having to convert it, etc., you're still getting some Ergo, but you're just getting some ErgoPad on top of this. I think this will also help dissuade miners from liquidating all of their ErgoPad, and it could be an extremely beneficial way for miners to participate within the ErgoPad network, but also not be incentivized to basically destroy the price of ErgoPad, which I think, as we go through this blog, is what they're trying to prevent. So they want to incentivize miners to participate within the ecosystem without destroying the price of their token for their current holders. And I think that is extremely important here. So we are testing this as a pilot program. The goal is to get more ErgoPad out there. If we find that miners are using the subpool only to sell ErgoPad on the open market, we will not continue the program. So just like I said, this is pretty much why they're doing it in this manner. But if they decide to keep them and become ErgoPad stakers, we believe those new community members will be beneficial to the ErgoPad ecosystem. To test the program, 500,000 ErgoPad tokens will be added to the subpool, and we will keep track of the markets while they are being distributed. In exchange for the ErgoPad tokens, the ERG mined will be added to the ErgoPad treasury. So that's the 10% of the Ergo that you mine, and used to fund further ecosystem developments. Some of that development includes new Oracle functions, NFT sales contracts that anyone can use, generalized off-chain execution bots, Python tools for developers, improved staking contracts, DAO tools, and much more. Our devs have been busy, and this additional funding will allow us to continue to grow our team and contribute more to the ecosystem. We are very grateful to everyone in our community for their help. As we work towards a better future for everyone, we will keep our community up to date on the development progress. So, TLDR is that you can now do smart pooling with ErgoPad and get paid out basically 10% of your Ergo in 20% of ErgoPad. The danger here for ErgoPad, of course, is tanking the price of their token, so that they've actually structured this, I think, in a much more wise way than Aneta had. Of course, Aneta was the first token on the smart pool that really went pretty hard and kind of changed the game, I think, at the end of the day. But what we did see was a huge dump in the price of Aneta, and that did hurt the overall community. So I think what ErgoPad is trying to do is bring in new people from the mining realm, but also still protect their current community as far as their token holders. And I think that makes a lot of sense from that perspective. I think from the mining perspective too, it's kind of like the dual mining positives to a certain extent, where like you are getting a little bit of this extra token that you can hold on to, use it for staking for something else, or, you know, have that upside later on if the project is successful, and just some additional revenue if that's what you're really looking for. Of course, right now with Ergo in general, it's not one that I think people are mining for a ton of revenue, just to be completely honest about it at this time, because there are more profitable coins, quite a few different ones. So that is pretty much where we're at as far as the smart pools go. And I really do think that smart pools at the end of the day are going to be some of the most interesting things that come out of Ergo. I think that Ergo has, and their entire ecosystem with rolling DeFi and NFTs into, you know, the proof of work blockchain is innovative and beyond what any other network's currently doing. So I think that that is a positive. Let's talk about this though. So cryptos and securities, like I've said it before, like, you know, call a spade, but don't take my spade away from me, in reference to, of course, securities. And the idea there is essentially that, yes, to a certain extent, if we do the Howey test on a lot of tokens, on a lot of different cryptocurrencies, but tokens in particular, right, you end up in a spot where it's pretty clear that traditionally defined, it does seem to fail the Howey test, meaning that a lot of tokens and cryptos are securities. But they do set themselves apart. So I prefer that there's not as much regulation around cryptocurrency in general, especially, or even if they are, you know, deemed a security at the end of the day. So it gets a little tricky, but then the question is, does that really matter, right? And so we have an opinion piece here from CoinDesk, and I wanted to go over it with you guys. So when a main U.S. regulatory body defers to crypto Twitter for leads on security laws violations, you know these categories are subjective, and I think that that is going to be kind of the point of this. So he did go on to say that he is working on an article, the writer of this particular opinion piece surrounding proof of stake and proof of work, and we will be taking a look at that article when he finishes it. I'm pretty excited about that. But since a proper proof of stake and proof of work piece deserves a lot of careful, deep thought that I'm incapable of at the moment, he says, let's instead focus on two players that are writing the narrative for Coinbase and the U.S. Securities Exchange Commission. On July 26th, it emerged that Coinbase was being probed by the SEC for allegedly listing securities. This news came on the heels of an insider trading case brought against a Coinbase employee and two others on July 21st by the SEC and the U.S. Justice Department. Making matters somehow worse, Kathy Wood's ARK Invest offloaded 1.4 million Coinbase shares on July 27th. Woof, he says. It has been tough sledding for Coinbase since it went public last April, and the latest obstacle on its most recent downhill slide is securities law. Everyone's favorite. No, I won't make any assertions of if Ether is a security or not, but I will make the assertion that it doesn't matter. And I think that, I'll just put it this way, Ethereum being a security is a lot more likely when it moves to proof of stake. We'll go into that in another video, but a lot of people need to be aware of the way proof of stake functions versus proof of work. With proof of work, you do have essentially electricity costs is going in there. You have work being done that is being rewarded. Proof of stake specifically only rewards people for holding or basically purchasing and holding Ethereum, right? And so you end up putting yourself into a securities. You are not actually doing any work. You're not actually solving any work being done. There's no commodity being traded there. there's a commodity being traded for the work being done. Essentially, once you move into proof of stake, you move yourself into a security portion. And I bet he'll probably talk about that in his proof of work versus proof of stake article. So he's saying, though, that it doesn't matter. So let's get into why he says it doesn't matter. So first, Coinbase. Coinbase is one of crypto's non-token real business success stories. Founded in 2012 as a means to easily and securely send, buy, and receive Bitcoin, Coinbase has been since expanded far beyond its roots and now hopes to become the Amazon of assets and list every asset out there in crypto that's legal. It went public in April of 2021, and it was a huge deal, debuting on NASDAQ with a valuation of $100 billion US. Turns out that Coin going public marked the top of not only crypto markets, but also the company. Aside from its dismal stock price performance, down 81%, Coinbase is also losing in the court of public opinion. Earlier this month, I wrote about how Coinbase was going public led to an imperative on consistent infinite earnings or revenue growth, which further led to an immense expansion in the headcount. This all culminated in this, quote, an absolute public relation nightmare when Coinbase cut back on hiring in May, which rolled into rescinding new job offers. Remember this, guys? The blowback in turn led to a pointed tweet thread from co-founder and CEO Brian Armstrong urging dissenters to quit, following an employee petition to remove executives from the company, which was then followed promptly by the exchange laying off 18% of its workforce, end quote. Buried in that same piece was a link to a tweet thread by one Jordan Fish, aka Kobe, an early Bitcoiner who invests in crypto projects and co-hosts the Up Only TV podcast. I follow Kobe on Twitter. He is a pretty good source of information, at least on Twitter. I don't really necessarily listen to the podcast, to be honest, because I don't have time. I have listened to it. I do like his Twitter a lot, though, so definitely go give him a follow there, in which he outlined how many of Coinbase's asset listing suggestions seemed questionable. And we covered this as well last week. Kobe has posted several tweets and tweet threads about questionable practices across crypto. He even found someone, thanks to the transparency of the Ethereum blockchain, who bought tokens just before they were listed in a Coinbase asset listing. The blog post where Coinbase outlines the assets it is considering to support on its platform. Assets that get listed on Coinbase usually spike in price shortly afterward. And this is something about crypto that, we've been talking about for a while, and that's all of these coins, when they get listed, they do pump. And that is why speculative mining can be particularly advantageous. And speculative mining, the reason I always say that it can't be already listed, you can't already have a price listing for it, is because the speculative part means you get that pump when you get the initial listing. And that is almost always a guaranteed pump. And then, of course, if you get additional larger exchange listings after that. So you would have like an exchange hierarchy list, right? Maybe Trade Ogre at the bottom, something along those lines. And then your Coinbases and your Crypto.coms at the top for the large spikes. Typically in the life of a coin, you would have at the beginning some small exchange listing, and that would be right after the network launch and has been stable for a little bit. The speculative mining would happen before it was listed at all. You'll have that boost, your initial price bump. You'll see it go up on the chart the day of, and then it'll come back down and settle out. And then later on, when they hit a bigger exchange, you'll see another spike that will give you a new all-time high, and they'll come back down a little bit and then go straight and flat for a little bit longer. So if you were aware of listings for large exchanges like Coinbase or Crypto.com, you could obviously perform some sort of insider trading, which is going on at Coinbase here, and what the problem is, and purchase that particular coin before it's listed on Coinbase, knowing for a fact that it will go up in price just from the listing itself. Assets that get listed on Coinbase usually spike in price shortly afterwards, so there was something potentially fishy, as it were, given how obscure some of the considered tokens were. This same tweet, and I cannot believe this is true, was cited by the Justice Department in its July 21st press release charging a Coinbase employee with an insider trading tipping scheme. Here's where it gets interesting. According to U.S. law, insider trading happens when individuals trade securities based on a confidential or non-public information. But Coinbase lists cryptocurrencies, and cryptocurrencies have been operating in a regulatory gray area for some time now, meaning that the definition of insider trading means that essentially it has to be deemed a security for it to be considered insider trading, right? So because it's in a gray area where it's not a security, technically the Justice Department will have to define any given token that's been traded in this manner, right? That's been manipulated essentially, or bought before the listing as a security before they could press charges on these people. The SEC in this lawsuit specifically called 9 cryptocurrencies securities. For the record, I had heard of exactly one of them before this case came to light. This means there's probably a path forward where a meaningful number of cryptos gets tagged as securities in the US, which nudges us towards our main topic, securities law. And I hope to learn something here because I do not know much about securities law, and we're going to go through this and hopefully get a better idea, right? At least a top-down, high level. Nick D, CoinDesk's managing editor for global policy and regulation, is far more well-equipped to talk about all the things SEC. So you should check out his work if you want to dive deeper. He wrote a great article in this newsletter about the SEC and crypto last week. You can check the link for this article, for the hyperlink to that article in the description below. I'm not going to opine on specific projects, partially because that is not my job, but mostly because it really doesn't matter in the abstract. At the center of a lot of internet debates lies a seemingly simple question. Is this cryptocurrency a security? I submit that this doesn't matter philosophically and that it only matters practically because of laws and stuff. So he says, stay with me. Yes, the SEC is tasked with enforcing laws against market manipulation to protect investors. And yes, that is a valiant purpose. But contending that market manipulation only matters in the context of securities is exactly wrong. Bitcoin, legally deemed a commodity in the US, market manipulation should be stomped out as well. If the SEC decided tomorrow that Bitcoin was a security, it would change nothing about Bitcoin fundamentally. It would also change nothing about Bitcoin market manipulation being bad. It would just change who thinks they can regulate it at this particular moment. And this is where it's really funny, but this is kind of where the nation state, or the federal government, the SEC, this is where they all fall short, especially when it comes to digital assets, right? You put yourself in a position where the cryptocurrency moves so fast, and the digital transformation is moving so quickly that in a lot of cases these people can't make laws fast enough and change them quickly enough and figure out the definitions of what they are to properly regulate it. So at the end of the day, whether you deem it a security or not really doesn't matter, because they're still going to have to go through these same processes. I think, though, he makes a very valid point here to where any market manipulation, whether deemed a commodity or a security, should be, of course, resulted here. I got to take a break and check out what's going on with these kids. 1 second, guys. Alrighty, guys, we had to go take care of some family matters, but I think we're good to go for now. We may be having to move the office somewhere else at some point so that we can get through a lot of the work I got to get done. But moving back to this, the idea is essentially we do not have to, you do not have to necessarily deem it a security. You shouldn't have to deem it a security to worry about market manipulation. There we go. All right, let's continue it. So that's the idea of the article, right? So no, it doesn't matter whether Bitcoin, Ether, Solana, Dogecoin, or AVAX are deemed securities. The SEC cites the Howey test when determining whether something is a security. While the agency has said in the past that Bitcoin is not a security, and while I'm not a lawyer, one can make the argument that the test sure makes Bitcoin look a lot like a security because investing in Bitcoin, one requires money, fiat money, but still money, unless you're a miner, and even that requires money to pay the power bills. Yeah, except you're paying the power bill. All right, so I think I disagree with him on this. Or one of the diehard merchants who receive it in exchange for goods and services. 2, which is invested in a common enterprise, the Bitcoin network. And 3, with a reasonable expectation for profit. Maybe unreasonable, but if Bitcoin demonized gold, the price of Bitcoin would go up. Or 4, derived from the efforts of others. I hold Bitcoin and I haven't once touched the code. Got it. Okay. And that doesn't matter one bit philosophically. It only matters practically because investors, institutional and individual, need to play by the SEC rules. Otherwise, they go to jail or get fined. But Bitcoin is still freedom money, gold 2.0, or a reserve asset, even if a government agency says it's a security. Though, again, it hasn't. Of course, if this practically applies to you specifically, then yes, it does matter. In that case, you should weigh the probability of Bitcoin or Ether being labeled as securities, which seems low at this point, and weigh the probability of other cryptocurrencies being labeled as securities, which seems higher at this point after the insider trading suit against Coinbase. Not because it changes why you're investing, but rather it governs if you even can invest, or at least whether you can without using a VPN. We did do a video on that. If you guys want to check out the VPN video and what cryptocurrency people use VPNs for, definitely go check that video out. Last bit that I absolutely have to mention before tying this question back to Coinbase. It only matters in the United States, and that's very relevant. Most people, in case you haven't noticed, don't live in the United States. U.S. securities laws shouldn't and don't directly affect my uncle in Greece. Back to Coinbase and Kobe's tweet thread that was cited by the Justice Department. The real issue with the front running of a potential Coinbase listing by an employee and the questionable assets it was considering for listing wasn't that assets in question were securities. The issue is ethical. First, employees First, employees at an exchange with that much sway over the price of an asset shouldn't trade on material, non-public information, whether or not the asset is deemed a security by the SEC. I'm not suggesting that this should be illegal. I'm saying that it is ethically bad. Second, and more important, Coinbase has a moral responsibility to ensure for its largely retail customer base that crypto assets it lists, whether the government considers them securities, commodities, or condiments, aren't best defined as valueless vaporware. Its failure to do so is the main problem, and therein lies the true challenge for a company incentivized to hit quarterly numbers. So what did we learn, right? We learned essentially the idea that practically it really doesn't matter if a cryptocurrency is defined as a security or not for a couple reasons. One, and philosophically, it only affects essentially the way the United States perceives it and regulates it, right? And then 2, that in general, this doesn't determine how the entire world, the rest of the world, deems it. So as far as like on the base layer of what cryptocurrency is. It's only one little segment of the entire population that can influence it if deemed a security. Now, like I've talked about before, we can call a spade here, and I think pretty much, in my opinion, anything that's proof of stake fails the Howey test at this point. I've given my reasons, and I actually pushed back on his definition of why Bitcoin could be considered a security based on the proof of work mechanism behind it. But, you know, at the end of the day, I still do think primarily if we are looking at most proof of stake coins, they could be deemed a security. Does that matter at the end of the day if you're looking at trying to invest in a project? Only if you are governed by the US, right? Which is another interesting point to take into consideration. Then we get into the entire philosophy of cryptocurrency completely dissolving the nation state. And if that was to be the case 10 to 50 years down the line, then none of this actually ends up mattering at the end of the day anyways. I don't know. It was a fun article. Let me know what you think in the comment section in the live chat. Let's talk about mining profitability right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Wow! All right, boys, let's get into mining profitability for the day. Now, I have pulled off about 1 gigahash or so and put it onto Ergo solo mining that I can't show you guys the information for because we built a node at the farm. We did that live on twitch.tv/blindrun, where I stream at night around 9 to 10 p.m. Central Time, depending on when the kids are in bed and all that sort of stuff. And then I usually take that time to work a little bit on reviewing maybe some articles that we're going to go over and reviewing my infrastructure as far as setting up nodes and so on. So if you want some of that insight, you can stop over there. Usually the viewership is very low, so if you have questions, I can also get to them a lot easier, unless I'm just super deep dived into something and not paying attention to chat, which does happen. So that can be a possibility when streaming on Twitch, especially when we're, you know, navigating all of the fun command line in Linux and all of that. But that being said, we have 4.5 gigahash a second online right now with an average of 4.46 over the past 24 hours. That gave us a payout yesterday of 110 US dollars, which was 0.065 ETH. And the expected earnings for the next 24 hours is 0.062 ETH, which comes out to 105 US dollars. And that's really not bad. We took a whole gigahash offline and we are still over $100 US. Remember last week when we were looking at, we were actually right around these same profitability marks. However, of course, the pump price in ETH is kind of making this buffer a little bit better. I do also have a group of 1063 gigabytes solo mining Flux. And I don't think that at this point we're going to hit any solo blocks on Flux. And I probably shouldn't be solo mining Flux. But I just threw it over here because, frankly, at the end of the day, I was having some issues with Ravencoin, etc. And I just decided to throw my 1063 gigs over here because obviously the DAG size on the Ravencoin wasn't allowing me to mine it. And we were on Neoxa, but Neoxa is having all their confirmation issues. So I'm not going to wait a ton of time to send out and liquidate my Neoxa, because I don't necessarily think that Neoxa's has potential for a high upside. So I'll give you my insight on that real quick, just in general. Neoxa, with their proof of game model, basically incentivizes people to basically mine the coin within the game and then sell it. There's no incentive for people to buy the coin to utilize within the game, at least yet. The way the Rust implementation is, the game Rust, not the programming language, just to be clear. Now, they were going to release the Minecraft server. I don't know if some things were going to be different in there, but then that got shut down by Mojang. There are a lot of issues with Neoxa going on right now. It's nothing against the team. I just don't think that there's really an incentive to push the price up, only to push the price down. And yes, right now the price is a little up and mining rewards look better, but that is because none of the miners and the gamers are able to really liquidate very quickly because you have a 725 block confirmation requirement for depositing any Neoxa into an exchange. This makes it extremely slow, so there's a huge supply going up into Neoxa, but that supply is not hitting the actual exchanges, meaning that you have low supply in the exchanges, but a high supply out of the exchanges, and it takes a long time to move it in. Therefore, you end up with a position where Neoxa is really, honestly, worth a lot less than it actually is revealed in the exchanges itself. And that is something you need to be very careful with Neoxa. Now, later on down the line, maybe they release another game server, and that game server allows you to maybe purchase things within the game with the Neoxa currency, and they are things that are enticing to people, right? They want some sort of clout in the game, and they use the Neoxa that they've earned to purchase it. Then you have a demand for the coin itself, and then you could drive the price up. But that has to happen first, and I would have to see that first before I would have a trust that it's not just being utilized to liquidate on exchanges. That's my 2 cents on Neoxa. Now let's take a look at what to mine. And we have the RTX 3090 pulled up at 10 cents a kilowatt hour. And that is going to be corrected ZIL hash at 110 solutions a second and corrected ProgPow at 60 megahash a second. That includes coins like Ravencoin and Firo, Neoxa, etc. So right now at the top of the charts is Ravencoin at $3.19 a day in revenue and $2.40 a day after power. Now there is a little bit of an argument here of maxing out this particular GPU on Ravencoin. But to be fair, the same argument would be played out on Ethereum. What do I mean by that? So what to mine sets the Ethereum hash rate 119 megahash a second on an RTX 3090. And frankly, due to the heat of GDDR6X and the 3090 having memory modules on the backside of the PCB, this is not indicative of real world performance in my experience, especially in higher temperatures during the summer like now. But that being said, if you look at Ravencoin, you're probably a lot closer to 52 megahash a second on Ravencoin, even though, yes, overclocked, you should be hitting somewhere around 60 megahash a second. The fact of the matter is, you end up in a position where, because of heat and the same design issues and flaws with the 3090, you're not really there at 60 megahash a second. Point being, really, at the end of the day, both of these numbers are a little off and favor it more than what your actual real world performance would be. So we'll leave it at that, meaning that I will give Ravencoin the lead, but your mileage may vary here. Like, in your particular case, depending on like your temperatures and so on, you could be in a position where, you know, your core is performing better at lower temperatures and Ravencoin's performing better for you, or Ethereum's performing better for you, depending on your temperatures and how you have your cards configured, etc. So you should be always, and what to mine is just kind of like, we've talked about this before, but I want to clarify it. It's not going to be 100% accurate. You want to test on your own. You should, you know, even take your card, run it against Ethereum, get the numbers, get the overclocks in, then run it against Ravencoin, get the numbers, get your overclocks in, and then manually plug those into Crypto 2 Calc or into MinerStat or into what to mine and get a better idea. Now, Neoxa is in third, but like I said, we have this kind of problem of a ton of supply outside of exchanges, kind of artificially increasing the price of Neoxa within exchanges, and you should be careful here. Remember, you're going to have a 725 block confirmation time, meaning that you are not going to be able to mine this and deposit it into an exchange and get your $2.09 out right away. It's just not going to happen. Fero's at $275 a day in revenue and at $201 after power. Cero's at $257 a day in revenue and $1.77 a day after power. Conflux is at $254 a day in revenue and $1.75 a day after power. And you have Flux at $250 a day in revenue and $1.81 a day after power. Obviously, from the pump in Flux, what you see is actually that the ZIL hash has dropped down below because this is previous market, right, pricing. So we actually have a case again where Flux mining directly is more profitable than NiceHash. This is outside of the normal kind of performance numbers for ZIL hash in particular, and mining to NiceHash is going to put you at $236 a day in revenue, $1.67 a day after power. Ethereum Classic is at $239 a day in revenue and $1.62 after power. You have Xano at $201 a day in revenue and $1.22 a day after power. You have Bitcoin Gold at $201 a day in revenue and $1.31 a day after power. We have to scroll down pretty far for Ergo, which is at $1.84 a day in revenue and $1.21 a day after power. Of course, you have the additional 5% option on Aneta, and then you have the additional 10% option on ErgoPad. So in theory, you could, if you were going to decide to liquidate, you could be closer to $2 a day in revenue if you were using one of those smart pool options. And there you go. Crypto Calc, which I think is a little bit more accurate, will probably favor Ethereum here over Ravencoin because it puts Ravencoin at 52 mega hash a second. It does show Ethereum at $3.13 a day before power, and it shows Ravencoin at $2.77 a day before power. And if you scroll down, you have $2.48 a day in Ethereum Classic and $2 a day in Ergo. So it's kind of where you're at as far as all of that goes. I like Crypto Calc a lot, though, too, because you can kind of come in here and figure it out. What I really like about this calculator is your solo mining, especially right now in the current ecosystem that we're in. Solo mining can be, if you're on a smaller coin, more profitable in a lot of cases. And you can come in here and you can essentially type in your hash rate. Let's do like 10,000 mega hash a second or whatever. It would be 0.15 ETH a day. And you can actually click here and say, can I solo mine? It says that you would find 2 blocks in 30 days. The general consensus, or the general rule, in my particular humble opinion here, is that you should have enough hash rate to see 1 block a day on this network. If it's 30 days, I think it's going to be a little too much. So I think like if you have like maybe a smaller coin, like let's do like Ravencoin or something. Smaller, or even Ergo is probably a good example, right? We could say like 10 gigahash on Ergo here you would get 1 block a day. So then I think at that point it makes a little bit more sense because you're going to have a lot better luck and you're going to be able to monitor it better. So even though you kind of have this luck play to where you could not find anything for a day, you're going to start getting a better idea on a day if you're able to possibly find one a day, if that's even possible for your network. Because the thing about solo mining is your network's going to come into play, I think, a lot more heavily than if you were mining to a pool. So your latency to the pool that you're solo mining to, right? If you build your own node, is that configured properly? Being able to track these things and pay attention to them is a lot easier if you have enough hash rate to essentially solve a block per day. So that's why I like utilizing the solo mining calculator. That's me. Let me know what your thoughts are over in the comments section in the live chat. Let's take a look and see if we have any major changes in network hash rates. We have Bitcoin at 233 exahash a second. That's up 10 exahash a second over the weekend. So probably going to be seeing a actual increase in the Bitcoin network difficulty chart probably sometime this week if it remains at that hash rate. Let's take a look at Ethereum. Ethereum is at 935 terahash a second, no real changes. Let's take a look at Ethereum Classic, still maintaining that 31, 32 terahash a second. I expected a dip off once the profitability came back down and the difficulty went up, but that's not happening. So there is some faith for miners apparently in Ethereum Classic. This is positive news for them. I do want to look at Zilliqa, because Zilliqa obviously had their network go down. So I wanted to show you guys in this chart here. You can see, boom, basically went down to 0 hash and then came back up to 33 terahash. So it came back up to where it was at. Interestingly enough, your hash rate on Zilliqa is almost exactly similar to ETC, meaning that most of the time, if it looks like if you are mining Ethereum Classic, you're probably also dual mining Zilliqa. The downtime is pretty crazy though, and we should pay attention, and I should probably do a deep dive on Zilliqa and how it functions in the background, because I'm curious as to if this is a potential issue in the future, and if we have problems, potential problems later on, which I'm kind of feeling like is probably a possibility with Zilliqa. Ravencoin at 2.5 terahash a second. Flux probably not going up yet, but I would assume it starts to go up soon at 1 mega solution a second. Of course, this price pump, like I said, 33% up to basically 65 cents is a pretty big price pump today for Flux. So hash rate will probably follow. We'll probably see tomorrow what that ends up looking like for Flux at the end of the day. Let's take a look at Ergo and see where we're at with that. We're at 9.71 terahash a second. Mining pool profitability on Ethereum for the past 90 days, ZET in first, Ether mine in second, Crazy Pool in third. For the last 60 days, ZET in first, Ether mine in second, Crazy Pool in third. For the last 30 days, F2 pool in first, Mining Pool Hub in second, Nano Pool in third. For the last 21 days, Mining Pool Hub in first, Nano Pool in second, F2 pool in third. For the last 14 days, ZET in first, Nano Pool in second, Mining Pool Hub in third. For the last 7 days, ZET in first, Crazy Pool in second, Nano Pool in third. For the last 3 days, we have Crazy Pool in first, Nano Pool in second, F2 pool in third. And for the last day, we have Crazy Pool in first, Nano Pool in second, F2 pool in third. Nano Pool really taking a huge lead the last day at basically like 0.0, let's see, that's like what? Oh, a 25% increase over the next best pool. Pretty crazy. ASIC miners, we have the L7, and basically still sitting in first unless you look at the Antminer E9 at $23 a day. Nyancoin coming back as most profitable for the script algorithm. The KD6 at $20.05 a day. And the KD5 is at $12.64 a day. So not only did we see a pump in Flux, but I'm feeling like this partnership probably saw a pump in Kadena. Yeah, we got a pump in Kadena. There you go. A 5% pump, but a pump nonetheless. Let's take a look at that chart over the past 7 days. So that partnership there, along with that listing of Flux, seems to have pumped both coins up a little bit. Antminer D7 at $11.33 a day. Let's scroll down, take a look at the S19 Pro, which is $5.73 a day. Let's get into questions and answers. Super chats are never required, always appreciated. First to be answered because they're the easiest to read. Tagging at Son of a Tech will highlight the message orange, making it easier for me to read. So if you don't want to do a super chat, that's fine. Just make sure you tag at Son of a Tech so that I can read it. That's really The hierarchy there is the easiest to read in chat is what I'm going to answer first. If you want to support the channel and its algorithm, do a super chat sticker, which is apparently best for the algorithm. Any price is good, so even if it's like 99 cents. And if you would like to have access to exclusive giveaways and content, check out the pinned comment in the live chat for our locals page at sonofatech.locals.com, where I get a majority of the revenue that is sent to us. So let's get into it today and get the questions going. Texas Ace says, ask Son of a Tech, have you seen the articles about Binance losing 90% of its customers after implementing KYC? No, I did not. And Amigos PC, thanks. I'm already making a messy. We got stains under the pecs, stains under the arms. We're getting it. I already did the plug though for Coastal Crypto Mining, but 5% off at coastalcryptomining.com with the promo code SOAT. I did not see the Binance articles on that though. That's interesting. So I'm going to look that up. Binance KYC maybe, search something like that. Boom, 4 hours ago. Thanks for bringing this up. So we'll get one more article in here for the day. Binance loses 90% of users after implementing KYC, losing billions in revenue. One of the world's largest cryptocurrency exchanges, Binance, like most of its counterparts, has to face the challenges of money laundering, terrorist financing, and bad press. Or they just have to concede to the ruling class saying, yo, we're going to scare you with these things, these bad criminals, these bad criminals. And what we get in exchange is all of your data and information and access to your financial assets. Just give us all of your freedoms, and in return, we'll give you safety. Give us all your freedoms, and in return, we'll give you safety. I hope that oozed sarcasm. 3 of the most senior members of Binance's compliance team recently discussed the challenges that the world's biggest cryptocurrency exchange by trading volume faces in these areas and how it has affected them in an interview reported on by CoinDesk on August 1st. Notably, Binance made the contentious decision in July of 2021 to reduce the maximum amount of Bitcoin customers without Binance KYC, know your customer accounts, may withdraw from 2 BTC to 0.06 BTC. Holy moly, that is a huge reduction. That is so bad. However, according to one of Binance's lead compliance officers, Tigran Gambarian, I can't pronounce that, the move has cost the crypto exchange billions in revenue. When he discussed how Binance is exponentially larger than its competitors, but using real math, noted the rate of illegal behavior is the same across the board. We have lost 90% of customers after implementing KYC, losing billions in revenue, he said. Good. People will show you what they want, bro. Just telling you. However, just hours after the report was published stating Binance had lost 90% of its customers, Binance CEO Zhangbing Zhao took to Twitter to call the figure a misquote. He stated, "It's a complete misquote. Look at the numbers." Ha 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 ha. That's actually crying faces. That's actually crying faces. According to research that Binance conducted, the amount of illegal money being brought in is weighed against the entire volume of the exchange. It can be seen that although there is some illegal money being brought in, there's also a significant amount of money coming in. He noted, quote, Binance is better or the same as most exchanges. Our stuff was drastically better than Kraken, better than Coinbase in some areas and worse in some areas, but there's not a single outlier. Binance is active in a variety of legal jurisdictions, which the lead compliance officer noted makes our job challenging. Consequently, he acknowledged the exchange needs to place a greater emphasis on those countries, France, Italy, and Dubai. However, the fact that it operates in such areas makes it possible for law enforcement authorities to take action. Notably, Binance flipped Coinbase to become the exchange with the most Bitcoin held globally, benefiting from increased public relation efforts and securing full regulatory approval in Dubai in March, in Bahrain, France, and Italy in May, as well as in Spain in July of 2022. Now, what do you guys think? Do you think they actually lost that much revenue, 90% of its revenue, or do you think that that number was inflated? We have a super chat sticker for $4.99 from Amigos PC. Thank you, good sir. We have a 99 euro super chat sticker from Forever Metalhead and a 99-cent super sticker from Bojangles. Thanks everybody for boosting the algorithm. Oh, Jay Great says, Ask Tech, a report came out last week that 75% of retailers will be accepting crypto as payment in the next 2 years. Wouldn't the argument be that crypto is a currency, not a security? Well, the argument would be commodity, right? Not a security, I think, as far as like, if we're trying to use the proper terms. That being said, it will depend on which cryptocurrency, right? Is that cryptocurrency being utilized as a currency? So I think when you look at like which ones are going to be accepted in retail is probably going to be part of the arguments there, right? So you have a Venn diagram, right? And you draw that out and you have commodities in one bucket and you have securities in the other bucket. And in the middle, is crypto, and crypto kind of goes over both of those in that Venn diagram. It's not rocket science to figure out that there are securities within crypto and there are currencies within crypto. The best chance for like a currency though, if you wanted to completely define it, would probably be Dogecoin, which is funny enough. We got another super chat sticker from Dwayne for $2. Thank you, good sir. Patrick says, Ask Tech, I got here a bit late. Doesn't classifying a crypto as a security have increased regulation versus a commodity or a currency? Yes, the SEC cannot actually. So the reason why it's relevant right now is because of the Coinbase lawsuit of insider trading, because you cannot charge someone for insider trading if it is not deemed a security. So because of the insider trading that was going on Coinbase, which was essentially someone knowing that a listing of a particular asset was going to be coming to Coinbase and purchasing it before that listing was announced, is what the issue is. But that particular listing of whatever that token is has to be deemed a security. So that is where the argument is coming into play, right? Should you buy, says at Son of a Tech, your thoughts on 130.90 versus 5.1660 supers for solo mining, which is better? Have a good day. I would go with the 5.1660 supers because the 30.90 is going to be a lot less reliable and the temperatures are going to be unmanageable. Dave says, at Son of a Tech, is it just random luck? Two miners has been finding fewer blocks than normal for the last couple days. Yeah, you're going to have, it's random luck when it comes to that sort of thing, right? Obviously, like we looked at the charts today and Crazy Pool was finding a lot of blocks. Detroit Iris says, Ask Son of a Tech, oozing sarcasm like the pecs are oozing under boob sweat. It happens, man. Chadwick says, Ask Son of a Tech, Neoxa was able to recover 15 million. Check Discord for more info. Oh, you mean recover 15 million from the hack? That's good. Village BC says, Ask Son of a Tech, inflated with zero research, but sounds clickbaity. The DBI guy says, Ask Son of a Tech, is there a general direction air heat flows off GPUs 30 series out of HDMI display ports or the other end? I want position my custom open air rigs to the correct direction out the window. So it would be coming out of the back of the card, but in general, the problem with most GPU cooler designs is that you're just dumping the heat directly into the case. Like the fans blow down onto the cooler and then that heat just spreads out kind of unevenly across everything. So that's why in the case of what I've been doing with the octo miners and removing the fans means that the airflow from the server fans is going straight out the back. So I have a lot more direction of airflow. If you had a blower style cooler, then it would blow out the back, but 30 series doesn't have a blower style cooler availability. I think maybe some of the 3070s did from Asus, possibly. Black Cat Crypto says, ask Sematek, those numbers have to be inflated. The 90%? Probably. Seth says, ask Sematek, L7 thoughts. I really like the L7 for an ASIC purchase. The pricing still seems pretty high, but in general, I haven't tested it, so I don't know if the actual miner itself functions well. So I'm going to kind of be reserved on my recommendation for it. What I do know philosophically is that essentially what you have from script miners in particular is that they don't develop new script miners unless there's a reason to do so, like a big pump in a coin. So as opposed to ASICs for Bitcoin, where there's just constantly new development going on other smaller coins for ASICs, you don't have that development going on. So you have a safer bear market purchase option of an L7, because you can be reasonably certain that you won't see a huge spike in the hash rate from a new miner during the next bull run. So you have a little bit better. That's why the L3 pluses were so good in the past bull run, because they were so cheap during the bear market, and the L7 didn't come out till midway or even near the end of this previous bull run. Another note is the nice thing about Script in particular is that it has the most coin options for an ASIC miner, meaning that you have more options to move to as opposed to most other ASICs, which have maybe 1 or 2 coins available to them. Village BC says, ask Sematek, I think the smart contract programming of many cryptos is what turns it into a security. Even proof of work coins like Ergo, I think, will be eventually considered a security. I think that would only be true if we are talking about a tokenized asset, right? So I think the tokenized assets on top of Ergo would be the things considered a security, Village. Chadwick says, at Son of a Tech, yes, so it's why the price has recovered a bit. Regret selling so fast. Could have made 2 times more if you waited until Sunday evening, is what it is. Yeah, but you also still have the problem of not a lot of it getting, you have a liquidity issue of being able to actually get it into exchanges because of the confirmation time. VR Rider says, ask Sematek, mining farm update video at 7:25. Where can I get one, or do you have to make them yourselves? Oh, the power meters? Yeah, that was actually built by a viewer, and he sent that over to me. We talked about it in a video, I think last week. You can go check that out. But there are other sites and resources where you can order the kits to actually build it yourself. Yes. And I should probably get on that for you guys to get that done. Another note is we do have another video or a vlog coming out this evening. So definitely stay tuned on the channel for that. Daniel says, ask Sematek, do you know if there's a place that makes blower style cooler for the 30 series? You want to put a few in L3 or S9 cases. L3 or S9 cases. Huh? No, I do not. Unfortunately, but thanks everybody for watching. I'm going to get ready for jiu-jitsu. Be sure to hit the like, comment, subscribe, and notification bell down below. And I'll see you guys next Tuesday.